Greetings, everyone, and welcome back to another red day in the stock market. In other words, just another day in 2022. Folks, a lot of fears about inflation, and there are a lot of folks who continue to jump ship to different sides of the inflation debate. And that's because, well, nobody really knows what the heck is going to happen. We know that historically inflation has always tended to go down in the past. However, sometimes it's only gone down when we've come out of steep recession or depression. Consider when we came out of rampant inflation from the period between 1916 to 1921, and what happened? Depression. Not even the Great Depression, crash of the beginning of the 1920s. Maybe we'll have a repeat here in this decade, a crash at the beginning of the 1920s or the 2020s. Then you've got, of course, the Volcker cure, which is essentially forcing a recession by raising rates so high that you wean all the cheap money out of the system and force a recession. It's also a way you can get out of high inflation. Maybe inflation won't stay up. Maybe inflation will just inflect down. In fact, we've seen some measures of inflation start inflecting down, and even others, if they are to even stay at high prices, like used cars or maybe washing machines, for example. Do we really expect used prices, new prices, or anything for these products to continue to rise, or will they just stabilize? Nobody knows. But folks also believe that even if these stabilize, that rents and wages can push prices up even more. There's also this new talk now, thanks to Goldman Sachs talking about this, which is one of the reasons they're talking and calling for potentially 4 rate increases in 2022 rather than 3. This new type of inflation called greenflation, which is, hey, if people are going to continue to go to green energy, then maybe if we go to green energy, you know what? Prices are just going to go up. And that would be a problem because if prices go up, well, then you feed into more inflation because as energy becomes more green, potentially it becomes more expensive. Of course, it doesn't help that we've printed an insane amount of money. By some regards, potentially now over 40% of money in circulation has been printed. So that certainly doesn't help inflation. Well, that's in part why our market's pretty fearful, because what do we have coming up this Wednesday? Well, we have a new CPI read. And instead of inflation coming in at 6.8% like it did for the month of December, we now expect it'll come in at 7.1%, which will be the highest level of inflation that we've seen in the last essentially 40 years, which is sure to grab headlines and cause more fear, especially name calling on the mainstream media, particularly by Republicans and against Democrats. So this Wednesday at 5:30 a.m. California time, we will have the inflation read. Again, we're expecting 7.1%. We'll see if it comes in higher or lower. I think it's probably too early for us to get that inflection point to the downside yet, so probably going to see some more red. The Beige Book also comes out on Wednesday. That is a summary of economic conditions. To me, I've always thought the Beige Book was really just like a summary of a bunch of anecdotes. It's not really that exciting, but sometimes it can have market moving information in it. Retail sales data is expected Friday. We're expecting a 3% bump in retail sales data for the month of December. And consumer sentiment is also due Friday. We are expecting a 70.4 on a read. It's about 20% lower than we were post the pandemic peak in peak sentiment that we had in April. And that's because in April, we started having these fears about inflation blowing up and housing costs blowing up. So all of a sudden, consumer sentiment started rotating straight to the downside. Also, more concerns that Omicron is continuing to cause potential staffing shortages, which isn't good, especially when you've got companies like FedEx warning that the spread of Omicron is contributing to staffing shortages and, guess what, more supply chain delays. But then there's always China to help you out. China had, this is just classic China. In the Chinese port city of Tianjin, which is close to Beijing, folks, they force tested 14 million people to find 20 people with COVID. They found them. They got them. They got the 20 with COVID. Although I wonder how many people got COVID in the lines to get tested. I don't know. But anyway, restrictions in China are pretty common, and those are renewing fears, obviously, that we could have some additional inflationary concerns because of China's activity. There are also fears that if there are slowdowns in China's supply chains, that we'll see slowdowns in American supply chains, particularly at our ports or in our warehouses or with other transportation between here and there. Really interesting report also came out this morning. If you haven't seen it yet, I posted a very detailed video on it, going through the study itself. But talk about a kind of a crazy study, but a study this morning revealing that potentially a prior common cold infection could actually help you prevent a coronavirus infection. Prevent a coronavirus infection, not have a less severe disease, but utterly prevent a coronavirus infection in a more likely or consistent pattern than vaccines actually would. So that was pretty powerful, that the common cold might actually be a better preventative to COVID than the vaccines. And this study is really sort of a wake-up call to the vaccine industry that, hey, maybe rather than just start targeting the spike protein, you ought to just actually target the coronavirus ball itself, like the core of it. Anyway, that was kind of wild. It was also wild because I think a lot of folks don't realize that the common cold is actually caused by 3 to 4 different really common forms of the human coronavirus. Different kinds of coronaviruses: human coronavirus, SARS coronavirus, MERS coronavirus. It's all a mess. Mortgage rates are up to about 3.22% on the 30-year. We hit a low, by the way, last January of 2.65%. So we're good 0.5% higher than that. Didn't help, by the way, that on Friday, European Central Bank inflation came in higher than expected. We were expecting a decline in inflation reads in Europe on Friday. We actually, instead of getting a decline, we got an increase. We went from 4.9% in November in Europe to 5% in December. That was an unexpected beat. Job wages, though, were only about 2.5% higher year over year in Europe. So not a lot of wage price pressure. But again, today, seeing some sell-off on this call from Goldman Sachs that we might actually see 4 rate hikes in the United States this year as opposed to 3. Keep in mind, the Federal Reserve only has 8 meetings. So if we have 4 rate hikes, and the first one's, it's not going to be January because they said they've got a complete tapering. I mean, unless they just totally U-turn, which would be really bad for the market. It's possible. It's less than 5% likely, but it's possible. It is possible that we could have a January hike, but again, unlikely. We do think that the first rate hike will be in March, followed by a May rate hike. So we'll have 2 rate hikes in quick succession, and out of out of these 7 meetings that are coming after January, either 3 or 4 of them are going to have rate hikes. So probably more than, well, either slightly less than or slightly more than half of all of the meetings this year will have rate hikes. This has been leading Treasury yields, obviously, to spike. What else do we have here? We've got, let's see here. Oh, yeah. Robinhood, when it IPO'd, was selling for about 20 times sales for 2021. Now it's selling for just about 6.5 to 7 times 2021 sales. So big old sell-off there. And what else? Well, I guess that's kind of a nice little summary here. Let's go ahead and jump on over and take a look at the indices, crypto, and some of the other good stuff that's going on. So what do we got here? Well, of course, we do have a coupon code for the amazing programs on Building Your Wealth, link down below. The big thing that happens this month, folks, is the Path to Wealth course comes out at the end of the month, and the price of that will literally double. And the reason for that is people are basically getting half off before the pre-sale's over because there's no content. So like if you bought the Path to Wealth course, there's literally nothing in it. And that content will be released towards the end of the month. Anyway, here are futures. Got Dow futures down just over a quarter. S&P futures down over 2 quarters. And NASDAQ futures, or sorry, that's 2/3 on the S&P futures. And the NASDAQ futures down 1.26%. Yikes. Yikes. That is amazing. Zachary, what question do you have? Okay, 10-year Treasury yield almost at 1.8%. This is some of the highest that we've seen in quite a while. I mean, if we zoom out here, let's just go. We can just go 1 year out. Actually, we are now officially higher than anywhere we have been in 2021 in terms of the 10-year yield. So the 10-year yield is now higher than at any point over the last year. Take-Two Interactive is buying Zynga for $9.86 a share. Video gaming industry purportedly down, if you at least you listen to the Turtle Beach reports. Anyway. Yeah, you know what, Greg? If you're asking if you should just sell your entire portfolio because this is probably not going to stop all year, then you should sell. We'll buy your shares. All right, let's take a look here at the crypto pricing. Crypto getting whacked here. Look at this. You've almost got Ethereum almost under 3,000 here. Wah, wee, wah. Let's go ahead and pull up ETH USD. Oh, look at that 5-minute chart here. Holy moly, it is a straight down chart. We go to that 1 minute, it looks just as bloody. So if we zoom out to the day here, we are supportless here. Supportless is not good because I think that means the next stop somewhere on 2,500, unfortunately. So we're not in a great environment for ETH. BTC also not in a great environment. Next support really about 37.7, not great. Tesla down 3% in the pre-market, down under 1,000 again. Let's go ahead and look at the pre-market losers here and gainers. So Tilray reported earnings this morning. It is up 10.9%. Ocugen up 4.9%, possibly because of its Covaxin vaccine, which could be actually reacting off of the COVID news from that study this morning that basically says the durability of spike protein vaccines is, which is not good. Not good. So, jeez. All right, so let's see here. Clover up 3%. All right, cool. Boring. She yawned. Boring 3%. We like 3% losses, or better yet, larger losses, like 4% on Affirm, or how about 8% on Emran, 5.5 on Lulu. We got you covered. Want another 5% off on Hut? No problem. You got it. Looks like we might be getting close to breaking Cloudflare under 100. AMC sitting at 22. DWAC dropping a little bit more down to 52. Tesla sitting at 996. Sounds like a discount sale. And Elon Musk did break 69,420,000 subscribers this weekend. It was about Sunday morning. Trade Desk down another 2.7. Nvidia, SoFi, Enphase, the faves all down. Etsy down. Apple down. See, the beautiful thing is when it's just everything that's down, it doesn't make you feel that bad. With the exception of banks. Banks doing unsurprisingly well. The more we expect interest rates to go up, the more we kind of expect banks to do well. So, JP Morgan not doing, like, it's not like it's blowing out, but it's certainly getting back to its October highs. What else is running here? We've got Solar Edge up 2%. Proterra up about 1.65%. Really bullish piece, by the way, on Proterra this weekend in Barron's. Proterra, they called them a leader in EV buses, 80% of their revenue coming from city buses, producing about 1 gigawatt hour of annual capacity of battery production throughout 2 facilities. Doesn't hold a candle to the almost 40 that Tesla does. Tesla's working on their way to get to 50 gigawatts of annual production, potentially even more at this point. So as the last count that I have. Anyway. All right. So what do we got? Well, we got 14 minutes to indulge in some pain here. Let's go to SPY. Ooh, yeah. Look at this. So what do we got here? An opportunity for some SPY puts down 69.69. Yeah. Okay. Some bizarro barcoding here happening with the chart. But anyway. Woo. Okay. So, even Google's down 1.24%. Okay. So let's go ahead and explore the Bloomberg. Let's see what they got over here. So, look at the treasury yield now over 1.083. 1.8 basically over that. Here's that 4 rate hikes from Goldman we talked about. Salt cap limbo threatens suburban districts. Eli Manning threw himself private equity. Okay. Omicron inches closer towards Beijing. Yeah, so this, by the way, is the reference to the port city that I already talked about. So we talked about that. Ooh, Omicron isn't. Oh, AOC got COVID, and scientist says Deltacron variant isn't an error. So there was talk that this Deltacron thing was basically a mistake of cross contamination, and multiple COVID reporters on YouTube, like John Campbell, great guy, has already kind of reported on like, oh, the Deltacron, it's probably just a mistake, and this was just widely covered this morning that okay, this is possibly just a cross contamination mistake because they found a variant showing basically characteristics that resembled a merger of Omicron and Delta, which means it would have the transmissibility of course, people immediately go to the worst case scenario, which is transmissibility of Omicron, but the severity of Delta, right? Bad, right? And then there were pieces that were talking about, oh, no, that's just a mistake. That's cross-contamination. They effed up, blah, 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 right? Well, now the Cyprus scientist is coming back saying, no, not so fast, not so quickly. He told Bloomberg in an emailed statement Sunday that the cases he has identified, quote, indicate an evolutionary pressure to the ancestral strain to acquire these mutations and not the result of a single recombination event. In other words, a mutation, which is not ideal. So, who knows? But we'll see. I think the last thing we want are more variants. I think folks are just, quite frankly, kind of tired of this. Elizabeth Warren looks like she's going off on Jerome Powell again, asking for some more trades. Okay, whatever. Let's see here. When do I see COVID ending? Jeez. Well, I was really hoping that Omicron would kind of be the end, especially if if it is kind of like having a cold, and if the cold can give you some sort of herd immunity, and please, let's just all get sick with the cold and be over it. Of course, every time I say that, I get a bunch of hate in the comments from people who are like, oh my gosh, how could you downplay it? Okay, listen, chill out. Okay, if I talk too extremely about it, everybody's like, yeah, it's Mr. Fudd, it's Dr. Fudd. Okay, hey, listen, it is what it is. It's not as severe as Delta. Get over it. It's bad for some people. Yeah, got it. Hopefully it ushers in the end of the pandemic. Knock on wood. Okay, we understand. More hospitals full, with people going to the hospital, even for shorter times, still means other people can die because they don't have the hospital beds available. We get it. But it's just it's almost like every time you make a statement that's even somewhat political, you have to overly explain yourself to make sure both sides are happy. Otherwise, nobody's happy. And quite frankly, it's exhausting because I think this world is just full of everybody with their keyboards and their keyboards ready to go. Anyway, that's how I've lost some keys to this keyboard. Just by sampling anger of people in Twitter, of course, or the comment sections. Anyway, so JP Morgan trying to come back to save the day again. Okay, so what do we got over here? JP Morgan Equities. Okay, here we go, folks. Here we go. Okay, hold on. We got to make this very clear. Okay, hold on. Introducing JP Morgan. JP Morgan analysts, the people who called Nikola a good investment because it was a good, quote, story stock, and the folks who said that January was going to usher in the rally, that it was going to be a delayed Santa Claus rally this year, and don't worry, January will usher in the new rally. Okay, so that JP Morgan, okay, that JP Morgan says the following: equities should be able to withstand the recent increase in bond yields, according to JP Morgan. Thanks, JP. Thanks for keeping your head in the game. You know, you're like the coach who comes in the middle of a baseball game. The other team's got 20 runs and we got 0. And you're like, hey, it's the bottom of the ninth. But I mean, I guess that's not really the middle of the game. But anyway, it's the bottom of the ninth. Just hang in there. Come on, JP. Anyway, as long as yields are rising for the right reasons, including better growth, we believe that equities should be able to tolerate the move. Okay. The rise in real rates should not be hurting equity markets. How do you write this crap? Whew. Oh my gosh, I can't believe I even read that out loud. The rise in rates should not. Okay, whatever. Oh man. Signs that the Federal Reserve may tighten its policy more aggressively than previously expected have made for a bumpy start to equities in the year of 2020. Okay. JP Morgan strategists expect yields to keep rising, not least because demand for bonds will drop as the Fed winds down stimulus. Okay, which means blah, blah, blah. Okay. All right, what else? We don't see higher yields canceling the upside. Okay. Yeah. Meanwhile, Goldman Sachs is like, yeah, right. Okay. All right. Well, pick a side, I guess. Thanks, CryptoWire. I'll take your $5. Thank you. Okay. So, all right. I'm getting spammed with messages that apparently Bitcoin's under 40K. I don't see that. I don't know. Maybe it is on Webull. Who knows? Coin market cap's not always the best. Or maybe they're just ripping you off over here at the price. Or I missed it. It's a 40,000. Oh, it did. Look at that. On the minute candlestick. It is briefly getting dip bought here. That's kind of interesting. Yeah, look at that. Went down to 39.8. All right. Well, we got 6.5 minutes to go. So I guess we could go read some more stuff about, I don't know, JP Morgan or something. I already read all these newspapers. Well, because I actually get the newspaper. So I already read all these headlines. That's why I kind of give you a summary at the beginning. So I guess that's kind of boring. But we'll figure it out. We'll see if there's anything new. So, yeah. Sometimes there is, like Djokovic. He's freed. He could still get stuck. And then he'll need help getting unstuck. But anyway, we'll see. All right, so what do we got over here? Take a look at this. So we got the Financial Times. Oh, where'd it go? Oh, here we go. Financial Times has a piece here on the Federal Reserve being on track to raise interest rates as early as March, economists say. So remember, folks, in January, the Fed is still expected to be tapering, but not done stimulating, which honestly, if you think about it, is really weird. So everybody's freaking out. Or is he free? Well, I mean, the judge apparently let him go and said that he had done everything he could have possibly have done to comply with visa orders. But yeah, I don't know if he's getting stuck like a stepbro. Anyway, so okay, everybody's so worried about inflation, and right now the Federal Reserve is still actually printing money, which, if you think about it, is really weird. they're still printing money right now at a tune of roughly $70 billion over the next month. And then presumably over the next month thereafter, probably somewhere around half that. I don't know, $35 billion. And then by March, zero. But for the next couple months, we're still actually printing money, which that's kind of crazy. But I guess we are. Anyway, so what else? Let's see. Yep. Okay. What is this chart here we got? Unemployment rates. Yeah, it's no fun. All right, that's boring. Let's look at futures again. Futures are getting worse for tech. A little bit better there for the Dow. Here you go. Oh, this is an interesting one. Oh, yeah, here we go. Check this out, folks. Here's the news you all have been waiting for. No, it's not that the coupon code is expiring, although that is true. The CEO of Pfizer has said that a vaccine that targets, wait for it, Omicron will be ready in March. So pre-order your vaccine now, and maybe you'll get it the day it comes out. The vaccine will be ready in March. We already started manufacturing some of these quantities. Also says the vaccine will target other variants circulating. Well, if it doesn't target the Deltacron, I don't know how I feel. Let's see here. The hope is that we will achieve something that will have way better protection, particularly against infections. Because okay, I see what you're saying. But first of all, why are they manufacturing this when their quote is, quote, the hope is that we will achieve something and that will have a better protection. It's like, why aren't we testing it first? Whatever. They're trying to get these vaccines that will have a better protection against just infections, right? Because the thing is, right now, everybody's still getting COVID with the vaccines. The protection against actually getting it is really low with the vax. The benefit of the vax for at least a portion of the population is preventing severe disease, hospitalization and death. Which, I mean, in fairness, if you look at any of the statistics for hospitalizations from COVID, it's predominantly amongst unvaccinated. So it makes sense. But anyway, I'm a little frustrated by this phraseology of, hey, we got a new vaccine. We hope it works better than the last one. It's just, I don't know. It's all a mess. How about that? Even the USA Today ran a piece about how Biden's slow with COVID testing. It's like, it's bad when the USA Today is slamming Biden. Anyway, all right. Let's go back to Bloom. Bell? No, we're like a minute away from the bell. I don't know why everybody's screaming bell. Can't miss the bell. So chill out. We've got a minute to go. Oh man. All right. Let's see how things are moving before the bell. Hey, we're getting a little rebound there in BTC. I kind of want to buy some just to but I don't know that there's any rush. This market doesn't seem like there's a rush to buy the dip. This is what shout out to the great Kathy Wood. We call a soul searching market. So if you feel the way I did in my last tweet, well, here, I don't know. Some of you don't follow me on Twitter yet. I don't know why you don't, but maybe you should. Because if you did, you'd get high quality tweets like this. Well, the stock market is dropping again, but I'm out of cash to buy the dip. So I guess today will be a soul searching day. Hashtag soul searching. And you also get cool stats on nuclear power, like 50 years worth of nuclear power waste only takes up a football field. Anyway, we got to go to the bell.
I know. Goldman. Not a lot of bones to that. Boy, I've got to tell you, the damage that's happening to the market is totally masked by the banks. which make the Dow Jones average look so good. But now we're really starting to get, Nike was an institutional favorite. Lulu was an institutional favorite. They're not being made up by Boot Barn. And it isn't like that. I just find that this market is
obviously mostly red. The first minute's always really interesting. Mass compliance experiment. Oh my gosh. Oh, it's going red. All right. Well, we're not sure. We're not sure which way it's gonna go. We're not sure. Spy doesn't know which way it wants to go. Let's look at Tesla. That'll tell us. Hey, it's going up. That's good. We got green on ARC. They are red, but they're green candlesticking. Like, wow, look at that Robinhood. Interesting buy orders there out of the gate. Okay. I always like to look at BTC right at the opening just to see if the opening bell is a catalyst. And somebody really thought that I thought that BTC opens for trading, that market open. Somebody left a comment, and I'm like, you know what? Not even going to reply. So many. I got to just stop reading the comments. I can't help it sometimes. It's just so funny. Anyway, no, some of the comments are really good. You actually add insight and quality commentary. Anyway, Coinbase down about 5% along with the miners over here. Folks, backed holdings is now down at $5.93. Etsy is back at $1.75. Shift Technologies, solid $2.90. Affirm, not as bad as what it was a little bit ago. Oh, Tesla just dropped more, I believe. I'm pretty sure I just saw Tesla go red again. It's been, oh yeah, look at that. Oh my gosh. Oh, take the knife out of the front, because that's not even a stab in the back. That's just, you know what? With how much Tesla is falling, I'm sorry. At this point, make sure you check out that coupon code link down below, because I need some sales here. I'm not gonna hold back anymore. It's just, you know what? Basically, just bail me out. Check out the program's link down below. Tesla down now almost 4%. It's like we're pretty much giving up all of that run there that we've had since the high 8s, which was a pretty unique opportunity there when Elon was selling. But now it looks like that unique opportunity is just going to become normal. It's kind of like the story of the Heavenly Maiden, where basically the Heavenly Maiden is heavenly because she's new and unfamiliar and exciting, but for some reason the Heavenly Maiden always becomes ordinary, and then it's like there's another Heavenly Maiden. Anyway, I don't know. All right, I just need to drink some more coffee. Okay. Oh yeah. This morning I grabbed this coffee mug, and I thought it said bankrupt coffee. But it says bankroll coffee. So, yeah. Look at that Ethereum sale, though. $29.50, folks. Woo! If and I don't get paid to say this, but one of the cheapest, remember, the cheapest place to ironically buy your crypto is Robinhood. That's so crazy. But the spread is just wild on some of these places. So what's actually happening here? Are things actually just getting worse? Yes. The answer is yes. Or you know what? Just yes. Yes. Worse. Yes. Nick's point of view wants to know if I'm still 10% in margin. Well, before today's fall, I was probably about 13 to 18% in margin. Now, with this fall, I'm probably 16 to 22% in margin. And I give that range because some of the cash I have that makes that difference is put secured, which basically means I sold puts. And so I am essentially and likely and probably going to become the proud owner of some new stock that is now more upside down. But that's okay. That is okay. because there's some deliciousness in the market. Oh, volatility up 12%. Even though volatility is up 12%, we are actually only at 21.1, which isn't that bad. You know when things are hitting the fan, when things are going bad, it's when the volatility index is in the 30s. Okay, when somebody writes WTF is going on with Tesla, it probably is not a good sign. No. Yeah, it's down 420. Okay, just kind of like Robinhood. Yeah, or Neo, or Eater, or Upstart. Upstart's going to go under 100. They're going to have to change the name to Downstart. Cardano's going back to $1. Solana, oh my gosh, it's at $1.30. It was all the rage at 200. BTC is just like, all right, peace out, y'all. We's probably getting liquidated. In fact, let's, for giggles, go look at the liquidations. Oh, it's a coin glass or something. Liquidations. They changed their name. All right, let's see who's getting wrecked. Nope, not that bad yet. I mean, let me zoom in here a little bit. Let's go to the past hour. Yeah, oh, no, yep, there's some wreckage going on. Pretty sure in the last 36 minutes, $110 million of crypto got wrecked. I like that it's called wrecked, R-E-K-T. It's another way of like saying you got clapped. Not like you got the clap. You got clapped. You got wrecked, The clap is something different. We'll talk about that here. We're going to get the medical community up in arms. So, okay. Well, let's see here. Oh, Rivian. See, Rivian and Lucid just continue to prove to be the best shorts. Best things to short, because they just follow the most. Well, next to Affirm, of course, it's at $74 now. Wow. Let's see here. Etsy, 170, 175. Okay, that's kind of where we've been. Palantir, how's this one been doing? Rinsed. Oh yeah, that's another one. Maybe if you rinsed, you wouldn't get clapped. No, stop. Just stop. Oh, I do remember people buying the dip on Toast at $55, and now it's at $27. Ugh. Yeah, it's a rough market. Well, did Palantir go under 16? Let's see here. Yeah, it certainly did. Palantir is at 1576 right now. You can now get oh, look, we're in a little U-turn here. You can now be a proud owner of the Palantirs for the low price of just 1576. Oh, I can't even whistle. That's bad. It's embarrassing. It's just it's one of those mornings. When GameStop goes down 9.4%. Hey, but they announced an NFT marketplace. A lot of good that did. Looks like Affirm's bouncing a little bit off of those bottoms, so some buying the dip is still alive. Roblox is almost under $80 again. In fact, it fell to $79.60 just about a minute ago. Oh yeah, I love the sounds of drinking coffee. Okay, who here? I gotta know. Like, these are important questions here. Okay, who hates the slurping coffee sound? Hate it. I don't mind. Okay, so it's either you hate it or you don't mind. Like the one when the coffee. Like I ask when I'm around people, I ask them. I'm like, hey, does this bother you? Because it bothers me. Like it drives me nuts. It doesn't bother me if I do it. But when coffee's like really hot and really fresh, and then people are like, I don't know. It drives me nuts, except when I do it. Anyway. Okay. So let's I want to see what's going on in yields. CNBC. Oh, don't look at the portfolio today. I looked. That's actually not as bad as I thought. I got the little buy window up. Oh, the S&P and everything went down even more. Look at this. The Nasdaq's almost down a full 2% here. S&P went down a full percent. Russ down 1.2. This has all gotten worse. Oh my gosh. Wow. It's really been sinking here. Let's see here. SPY. Yeah. Oh, we're getting a little bit of a rebound though. I think that must mean it's probably time to go shopping again. Let me see what's going on here. Oh, look at that end phase U-turn though. Very nice. Very nice. How about Tesla? Tesla. Ooh, yeah, Tesla. Okay. All right. A couple little U-turns over here. Oh, not in Etsy though. How about the trade desk? Yeah, okay. Little bit of love here. How about in the hood? The buy the dipper's finally coming out. Probably won't last. Never lasts. Trade desk was up like 5% for a moment last week. I think it was actually Friday. And just total U-turn. It was very, very interesting. It does at least somewhat, though, look like. And remember, with those inflation numbers coming out, it's going to be some pain. But I don't know why I'm doing it, but I'm going to do it. I can't help it. I cannot help myself. This is just what I do. Bye. Kevin, no, don't do it. Oh, I did it. Okay. Well, got to send those alerts. Well, this is the thing. Sometimes people get mad at me because they're like, "Oh my gosh, you should be selling. You should be selling." I've just found that be fearful when people are greedy. That's all. And I know that's such an easy thing to say, but let me just put it this way: it takes some steel balls to buy something 20% less than what you bought it for just a few days ago. And it's always done well in the past. That's not financial advice, of course. But anyway, yeah, you've got to really pick your team. Are you team transitory or are you team, get smoked? And it depends really where you sit because, if you think that inflation's not going away, then you think we're going into a Volcker style recession is basically what you think. And it's not to say it's not possible, which is worth keeping in mind. It's definitely possible. 1,000. Okay. All right. I sent a couple that I've been meaning to add to, so I just added those. I sent that alert out. Now, keep in mind the Stocks and Psychology Money Group comes with lifetime access to everything that I do. So some people think I'm a madman for buying in the dip because it's like catching a falling knife, whatever. I've heard all the crap before. I think it's more of like in the downtimes, we're like a mental health support group. Like this morning, well, I didn't sleep today. I spent a good chunk of time hanging out in Discord, just chatting. It's kind of fun. But anyway, let's see how things continue to go here. So the SPY just started rotating down again, so it had a little false bounce there. That's okay. CNBC, let's go look at the blooms. Okay, so Bitcoin is off to the worst annual start since the dawn of crypto. Oh, that is a priceless title. That's a really good clicky title. I'm not going to click on it though because it's so good that I just can't click on it. Tech stocks extend losses. Richmond Fed's barking says the March rate is conceivable. Conceivable. Come on, man. We know this is coming. All right. Federal Reserve Bank President Thomas Barkin from the Richmond Bank says he supports the central bank's hawkish outlook for monetary policy and is open to raising rates when its bond buying stimulus efforts wind down. He says, quote, "I'm very supportive of what we did in December." Dude, what you did in December was double the pace of the taper, but you also released the most bearish minutes we have like ever seen before. Insane. But anyway, at the gathering, Fed officials put, okay, this was the asset purchase. I just want to see if there are other quotes from him. I don't need to recap. If you've got an economy that continues the levels of unemployment that we're living through right now, which of course is very healthy with price pressures elevated, I think according to our mandate and framework, we need to move towards normalization. I certainly think it's conceivable that the Fed will be able to lift rates at the March FOMC meeting. I mean, at this point, it's not just conceivable, it's basically priced in. Well, I shouldn't say that it's priced in terms of like the market's done falling. I guess I should say the bond market has mostly been building in the anticipation that we have a 90% chance of seeing a rate hike before April. Given that the only meeting before April that's not January is March, they're going to raise rates in March. That's the expectation right now. So we'll see. Remember too, folks, in 2018, we really had our last quantitative tightening cycle. This was more than just rate increases because we've seen rate increases as of like 2016, right? Here, watch this, okay? St. Louis Fed funds rate. Okay, here, look. Rates going up ain't the big deal because, look, zoom in over here. Okay, the market did fine in 2015, 2016, 2017. It wasn't until the insanity of 2018 where the rates were actually higher than what inflation was. Like, consider this, okay? In 2018, we raised rates at the end of 2018. We raised rates beginning of 19 to 2.4 to 2.5-ish%, right around there, right? Inflation at that time was like 1.9%. So they actually raised rates higher than what inflation was. And the market freaked out at the end of 2018 over this. 2018 was like a flat year for the stock market, which maybe 2022 will be a flat year for the stock market. Who knows? You know, nobody ever said you had to make money in the stock market. But anyway, unless, of course, you hodl and you should be okay, but no guarantees. I'm certainly not going to get guaranteed. But anyway, St. Louis Fed. So now what I want you to do is look at, the balance sheet. The Fed balance sheet, okay? Here we go. So look at when the tightening in the stock market or the pain in the stock market came, take a look at when the tightening was. So balance sheet balloons here. This is QE, right? This is like QE 1, 2, 3, 4, QE infinity, right? Like, anyway, the tightening really began in 2018. That's when the pain was. The offloading of the balance sheet right here, this 2018 period. Not so much the second half of 19. Things get a little better here. But then again, you also saw the money printer turn on again, which is kind of funny. And so when we see that inflection point over here, there'll be plenty of times to probably buy the dip. Probably. No guarantees. But anyway, let's see what we got over here. BTC. Oh, look at that. Skyrocket. What is this? What is this insanity? So we've gone now from 39,666 to 40,600 on BTC. What's the SPY doing right now? SPY is, oh gosh, it keeps dropping. 1.33% right now. Oh gosh, the indices are not happy right now. So BTC is recovering, but that has nothing to do with what the SPY is doing right now. How's QQQ? This would be your proxy for the NASDAQ. Well, it is down about 1.84%. You've got SARC up in the event that you actually shorted any ARC. It's not really shorting. It's just the inverse position. Tilray, it's got the momentum, and it's actually leading other cannabis stocks to go up substantially. So then you've got Ubiquity sitting still at 300. Roku, roughly positive here. Wells Fargo, again, no surprise the banks are green. No surprise. Results of the poll, by the way. Let's just end this poll here. So the results of the poll were that about 65% of you, 63 to, was it 64% of you do not care when people slurp their coffee, but about 1 in 3 of you do. 1 in 3. I guess that makes sense. All right. So, look, the small caps are going to take a while to come back, and we've seen so many dead cat bounces. I don't know. I mean, Shift Technology is down like 5.5. Don't got anything in it. I moved out of it. Corsair down about 2.6. Not as bad. What about TTCF? Let's look at the other one, the highly shorted ones. Oh my gosh, it's under $14 now. Lemonade stock sitting at 36. It had a run on Monday or Friday rather. Nice little run there on Friday. Then what else? Midway through, nothing crazy happening here. Ford down a little bit, Enphase down a little bit. Cloudflare, a couple percent here. I mean, honestly, at this point, a couple percent is like, that's it. That's all you got. GameStop here down 8%. We got, Affirm and Shift down in the gutter about 5%. Nikola going right back to $10. Also not a surprise. Let's just hop to see if we can get, what just get let's see what's going on in the back end. Let's see what the suits are talking about. Yeah, we'll do that. We'll find out what's going on over here. All CNBC wants to do is talk about Take Two. I will say it is interesting that Turtle Beach forecasted revenues to the low side of their expectations. It seems like they're basically blaming what they call, quote, AAA games not being as hot as they thought. Not as hot as they thought. Yeah. Says no, not gonna go there. Never mind. Just gonna keep moving. Oh look, S&P Banks Index hits record high. Last up 0.4%. Wow. Yay. 0.4%. All right, let me go see what's going on back here. Oh, Jimmy, Mr. Inflation says Kevin looks nervous. Kevin don't give an F. Kevin is on 6 cups of coffee and no sleep. Oh, a little thank you message. Thanks for being a client since 2020. Oh, that's cute. All right, let's see what's going on here. I want to see what the suits are saying. M live. All right, bond market well prepared for today's corporate supply. Okay, don't care about that. Bitcoin takes another leg down with 10-year rising. Companies start warning about Omicron hit to profits. Apparel firms are among the biggest pre-market declines. Oh, well, this is pre-market. After a series of warnings about hurting operations and profits, offering a potential preview of what's to come as COVID cases spike. Companies presenting at the conference, or the ICR conference, which is kicking off, include Lululemon, which Lululemon said that Omicron was constraining its operations. City Trends, which offers a variety of goods aimed at a family seeking to spend, sees, quote, way less traffic. Oh, but don't worry. The CEO said the drop in traffic after a strong holiday period is likely transitory. Yeah, I'm taking a screenshot of that one. I want to show you all this one so you can just bask. Please look at that last line. The CEO said a drop in traffic after a strong holiday period is likely transitory. Okay, don't worry, folks. The decline in traffic is transitory. Volatility Index hits its highest level since December of 2021 at 21.6. Now, remember, we hit a volatility of over 30 on December 6th. So I think we still have a ways to go on the volatility index. If I haven't mentioned yet, I need you to buy the courses linked down below because they give you lifetime access and the price goes up over time. And if you are worried about inflation, the courses are a better hedge to inflation than crypto. Enough said. Okay, let's see here. Demand for the 10-year hits a pause of 1.8. Yeah, let's look at that 10-year again. That seems to be driving some of the market action. So, look at these indices. They're all now down over 1%. The Dow has hit 1% down. S&P now down 1.43%. The NASDAQ has just hit the double. It has hit the 2 even. The Russell down 1.24%. Let's go ahead and look at those bond yields. Kevin's courses are just like Tesla, full self-driving. That's right. Can you scalp the courses? If you scalp the courses, that doesn't help me. You got to help me so I can help you. Anyway, let's take a look at the 10-year. No, it's kind of been stuck in this spot. All right. Well, it's up. It's definitely up. How's it been? Yeah, it's a little volatile here. Okay, no worries. So that's nothing new. Let's get to CoinMarketCap. What do we got over here? Did we go back over? I mean, CoinMarketCap seems to be lagging a little bit. Let's go do BTC USD over here. Yeah, okay. We did. We actually ran back up to 41. Look at that buy the dipping coming in. It's probably the liquidations that we saw. Usually a good time to buy, folks, is when those liquidations come in. And we did look at CoinGlass to see those liquidations. We saw that wreckage. Let's see here. BTC. We got all the various different ones here. Let's just do this. Crypto liquidations. That gets you right to the chart. There you go. Okay, so now if we jump on over to the hour chart, we're going to see that big old candle. Oh, it got worse. 126. That was about what we saw. That was about that early 6 a.m. liquidation period. There we go. Yeah, 6 a.m. And then the liquidations have settled down a little bit. So that's when you got your big spike right there at about 6 a.m. Probably 9 a.m. East Coast getting in. Time to liquidate some children. That does not sound good. Never mind. So let's see here. GameStop down 8.75. Rivian down 7.4. Matterport. Ooh, Matterport's down 6%. How is it even possible for Matterport to go any lower? Yes. How low can you go? It's at $14.63. Well, it went down to $11.20 not too long ago. So buckle up. Etsy 173. PayPal's also rotating down 181. PayPal's about to break its floor. PayPal has a floor at 180, and that it's about to go through that 180 floor. Tilray is even pulling back a little bit. Volatility Index now up from 12% to 15%. You can definitely see the flight to safety over here when you see the banks up and Coca-Cola and AT&T up. When Coca-Cola and AT&T are up, you know people have some fear. Even JP Morgan now, though, down red. Started green. Benefactor. But now red. Oh, yeah. Juicy. Oh, well. What else? I don't know. Got some more coffee. Coffee's good. BTC. Let's see. BTC. BTC's rotating back down. And I don't think we're really getting a recovery here in the SPY. I mean, look at the two false bounces we had. There's no support anymore. It's just basically, it's here. This is what we got, okay? All you have to do is open up a piece. Okay, this is the way you play this game, folks, okay? So the way the game is played is you take your calendar, and I don't know how to draw a calendar. I don't know. What is it? Is it 5 lines? 1, 2, 3, 4, 5, 6, 7. Okay, yeah. and then 4. So actually just 3, right? 1, 2, 3, 1, 2, 3, 4. Okay, there we go. So I don't know. We're like the 10th day in. So that's probably right here. So we're going to X off these days. And basically the game we're going to play is the following. You write down in big letters somewhere on the calendar, BK, okay? And then your goal, your job becomes go make money to basically try to move this one day over. And your goal is to do that over and over again. And eventually, a rocket ship comes in and bails you out. That's the goal. But in the meantime, you have to grind to make sure you can kick that BK date down the road just one more day. And in the meantime, while you kick that can down the road, make sure you avoid butter. Oh, okay, wait. There we go. Butter. Avoid butter. In other words, start saving money, folks. Save money. Stop spending. Because, see, the beautiful thing is, if we all just listened to very, very simple, not financial advice, and stop spending. Stop spending. Okay? This will help you kick the BK can down the road. Okay? The more you stop spending, the more you can kick the BK can down the road. That's bankruptcy, right? But in addition, the more y'all stop spending money on crap you don't need, the more inflation will finally go down. So, and if inflation goes down, then the market will hopefully go up. So, if you want the market to go up, stop spending, because it does two things. It forces inflation down and it kicks your bankruptcy date down the road. See? Come on, folks. Finance is easy. In the meantime, the S&P 500 is down even more now. S&P 500 is now down 1.55%. Continuing its plummet. I can't believe that Lucid's only down 1.8%. That's insane. Yep. Wow. Just wow. Where's Tesla? Oh, Piton's almost down 7%. Oh, yeah, it's getting nasty out here. Ooh! Tesla's actually quite stable right now. NASDAQ down about 2.25% now. We are getting worse, not better. Yep. Enphase is roughly stable here. Ooh, Matterport. Ooh, dirty. Next support line is 13. Ooh, starts getting juicy. NVIDIA. Imagine, folks. Oh, wow. Golly, NVIDIA is down 5% at 258. Oh, my gosh. It's starting to get delicious. Anyway, keep in mind that this Wednesday's CPI report, while everybody's expecting it to be bad and come in at, a number over 7%, what if it comes in low? What if all of a sudden we started seeing the inflection point? I don't think we're ready for the inflection point yet. I kind of think things are just going to keep getting worse, which is why you definitely want to check out the program's link down below to make sure you build and preserve your wealth. But with that coupon code expiring, my birthday coming up soon. But anyway, yeah. I don't know. Huh. Yeah, I think it's too early for an inflection point, but it could come. And that would be a probably pretty welcome surprise to 2022, because so far everything's on fire. I mean, even look at Robinhood, back to $14.91. OMG. SoFi at $5.61. Time to buy some protective puts and get yourself out of the danger zone. Or wait for a green market, buy puts then. See, then your pricing is going to be better. When the market's doing this spark line down, This is when puts get really expensive. But it kind of makes sense because everything is sparking down. I mean, look at this. Everything is going down. I don't even see a single line that's going up right now. I am not even being facetious. I cannot find a single line. They're all going down. Give me just one that's up. Come on. Okay, there we go. Aurora Cannabis. Slight little uptick there. Coca-Cola, 0.7%. Yeah, VIX doesn't count. That's cheating. Pfizer. Woo. Ah, oh well. So, well, okay. Jeez. Well, lots of pain. Well, anyway, I hope you enjoy the market. If you need life insurance, get life insurance in as little as 5 minutes by going to metkevin.com/life. Let's take a look over here. Tech stocks lead losses. 10-year hits 1.8. Probably go to 2. IKEA reduces COVID sick pay for unvaccinated workers. You know, Gavin Newsom wants to force businesses to pay their workers 2 weeks of time off if you get Omicron. Like, bro, 2 freaking weeks for Omicron? You got to be either high or out of your mind or both. Probably both for his case. Oh, well. Oh, well. All right. Well, that's pretty consistent. Does Kevin ever respond to comments? Well, okay. I think everything else so far is relatively the same. What is this? N26 got it wrong on global expansion in crypto. Co-founder admits. The co-founder of N26 admits that the German online bank rushed to be global too quickly and missed out on the cryptocurrency boom as it battles to justify its status as one of Europe's most highly valued fintechs. Yeah, fintech market. Great space to be. I don't think Pelosi's doing great right now with those call options, but oh well. All right, folks. Well, I think we'll do one more look here at the indices. Let's look at the pain one more time. Happy birthday, Eddie. 35. Let's go. Oh my gosh. The Russell's down 1.39. The NASDAQ had a tiny little recovery. S&P at 1.47 and Dow Jones 1.07 to the downside. Lots of pain. Yeah, it's pretty juicy. Yeah. Oh, well. Anyway, did Tesla bounce? Let's see. Here you go. A little bit. Barely. But a little bit. Ooh. Juicy. All right. Well, folks, with that said, I got to go. Appreciate it. I'll see you in the next one. Goodbye.